Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
Are bears really at risk of a short covering squeeze? I would say no. And here's why. I mean, only 2% of NASDAQ is short, but the point is we can already see from skew, it just collapsed. And the whole thing is a structure. Dispersion trades. What really, really got bid up on Monday, which helped the market tremendously, wasn't just the headline, which was Trump saying, we're going to do something different. We're going to restructure it, whatever. It was a positive tariff headline, but it was also the dispersion trades. Instead of heavily, hedging SPY, and of course with VIX just falling nonstop since Tuesday or Monday, Tuesday, February 10th or 11th, whichever one that was, and it hit 29.56, and it was a 2-bar reversal on a live
March
trade.
10th, yeah, March 10th.
And I was like, literally, this is where we go down into options expiration. So that worked. Did I expect it to go all the way down to the 200-day? No. So the point is, it then overshot to the 200-day yesterday, Monday, Tuesday, yes. And that's when I said, be careful. Now we're going to start come back up. And you could see it with VVIX. It closed up 7% yesterday. But my point was, SPX wasn't really the game. It was the dispersion trades. It was Tesla was heavily short, heavily short, not just all the geopolitical stuff that's going on and scratching and whatever. It was really the structure on Tesla from a dispersion standpoint was the most short of all the Mag 7 stocks, bar clearly. And that was the short squeeze. I don't see a short squeeze potential like we had in the yen carry trade. I don't see it in NASDAQ and SPY. If we get a move higher, it's going to be jump risk because tariffs are removed or once again delayed. Literally, Trump comes out and says, I was just kidding. Something like that. And it's going to drive sentiment and they're just going to start chasing above 58.50, 5900. Then we're going to get up to that 6,000. Then we're going to get hit right in the face again. But I don't see this as anything more than dispersion short covering. So the Washington Post just came out with a title. Alex sent our contributor, Dr. Alex. U.S. could hit borrowing limit as soon as May. So the CBO is out warning because our deadline for the debt ceiling is September, which is why Besant can't really change the composition of the issuance bills and bonds, short duration, longer duration, until this debt ceiling is resolved. Well, the CBO is coming out and saying, well, too bad. Depending on what we get for tax revenue, we actually could hit our deadline as early as May. So the market will start to price that in because it's a risk. That's a macro risk. We got tariffs and now we have debt ceiling and yields are not falling. They're actually rising, which is much more impactful as it relates to all the debt servicing, the interest that we have to pay on this rising debt. And the debt, and I'm not talking about the deficit amount that they've approved. I'm talking about what is being spent, what they're passing to be spent is actually growing. And that's actually the big problem. So until we get control of that, tariffs are part of the plan. DOGE is part of the plan. But if congressional spending is not part of the plan, we're still going to go back into this wonky period, fiscal distress, that's going to also weigh on the markets. This is the one that I often show here and clients get to see it every single day. This is where we were. Can you see this chart real quick?
Yeah.
This is where we were back in that August. The yen carry trade unwind was very impactful. Okay. So the August 5th convexity rally only caused growth to move higher for 6 weeks. It digested sideways until September 11th when NVIDIA came out and Jensen was on CNBC and did a big, brouhaha, and basically NVIDIA made the market. And after it started moving, everything else really started moving higher. So after that convexity rally on August 5th, we kind of stayed under the zero mark. And then we finally moved higher. Things took off again. We had the Trump bump and then it got completely dumped underneath the surface, which was very important. Mag 7 was becoming, not dangerous, but definitely Bag 7. And here it is just the other day. I literally took this and said, we're just about ready to have a little growth bounce. And all I see it going to is about 2, which is this ratio. It just means, again, this is a ratio of growth to value. And then what do we have today?
Well, that's the thing, Samantha. As long as those moving averages are pointing down, I feel like, you can rent those bounces. You don't want to get,
That's what we did. Yeah. That's exactly what we did. So rented that bounce because this is exactly where it went, right here to 2, and then it came right back down. So it was a 2-day terrific bounce in growth that got rejected and then came right back down. So that's exactly, to your point, how this this rotation
Yeah.
under works on a short duration, not the big picture, but the short duration.
Exactly. And look at those short-term averages. I know you like the 8, you can look at the 9, you can look at some of those shorter ones. And when everything's kind of pointing down, don't look at the 3-week rally. It's probably going to be little bounces in there that end up being kind of sold.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.